Hey guys, we're continuing the education. I think we're on item number 4. We've talked about income, credit, down payment, and now it's that fourth thing that really trips people up. Maybe they've obviously, I think, know that you have to have some kind of income, right? They've always heard that C word, credit. They've heard about down payment and FHA and conventional and jumbo and VA and down payment assistance, all that kind of stuff. But there's one thing that they always forget: closing costs. Closing costs are the responsibility of the buyer. What are closing costs? What can you expect? How might you kind of estimate? Again, this educational series is about generalities. It's not about your particular situation. It's maybe seeing where you fit in this scenario to see if now is the right time to go for your pre-approval and start this process. The closing costs. Closing costs are the costs associated with closing a transaction between a home seller and a home buyer, and it falls at the foot of the responsibility of the home buyer. What do those costs involve? They involve an attorney, right? There's documents that need to be drawn up. There is titles that need to be looked into. What is a title? Title means who has ownership of this property and who is it going to be transferred to? Meaning the title, a free and clear title, will have no liens on it. That means no contractors are owed money. That means there's no property taxes that have not been paid. It's a clean title. It's a clean file that is going to be transferred at the sale of the property, which takes place at an attorney's office 9 times out of 10. Sometimes people in this age of COVID are doing mailaways, power of attorneys, virtual closings, but 9 times out of 10, it's going to be at an office at a closing attorney. So there are fees associated with a real estate transaction. In addition to attorney's fees, there are going to be, and I can't even name them all, you're going to look at your closing document and you're going to see things like an e-file fee, a mailing fee, a notarization fee, a underwriter's fee, all kinds of fees. Some of them might be $10, some of them might be $5, some might be $650. What's the rate of that closing attorney, right? And then these files, these titles, these deeds need to be filed with the government offices, right? Your city, your state, your county, whatever the case may be. So there's filing fees. Then you're going to have more than likely, again, 9 times out of 10, there are more and more, because people seem to be doing, some people seem to be doing really well, whether they've come into money, whether they've hit it great in the stock market, investments, business owners, crypto, whatever the case may be. There are people that are paying straight out cash, no mortgage lenders involved. But a great majority, probably 99% of our clients and most agents' clients and brokers' clients are going to be reliant on getting a mortgage. Well, there's costs associated with a mortgage. There's sometimes what's called points or origination fees. A point might be you buying down the rate. Maybe the rates are currently 3.5, but you have extra money in the bank. You want to get that rate down to 3.25. You can pay what's called a point. That's going to cost you at the closing table. They're also going to do, what's most likely going to do, is what's called an origination fee. And I've seen them be from less than 0.5%. On average, I would say 1%. If it's a hard money lender or somebody that hasn't really researched their mortgage companies, it could be higher than 1%. It could be 1.5%, 2%. They usually it's kind of, to me, predatory lending when you start going over 1%, because you're probably not either well informed borrower, or you actually have a lot of issues with your file, but you just want a house so bad, you are overpaying when it comes to the lender fees that are included in that. But these are all are going to be on what's called, when you get to the attorney's office, what's called a closing disclosure by the lender, and then what's called an ALTA, formerly known as a HUD form, Housing of Urban Development. Now they call it an ALTA form, ALTA. And you're going to see left-hand side typically debits and credits for the seller, right-hand side debits and credits of the home buyer. And so what does that mean? That means that everything in that column that is a debit, that is not being credited back to you, is going to be your bottom line number that you're going to have to come to the table with, your cash to close. So to give you general, again, it's going to make a big difference depending on your fees, that the attorney fees or your lender's fees, like we just talked about. If somebody's charging you 1% or less than 1%, and another lender's charging you 1.5% or 2%, it's going to vary. But in general rule of thumb, you're looking at, I would say, 3 to 3.5% of your sales price. So again, when we previously talked about down payment, look back at that video. Same type of thing. Look at it, probably a worst case scenario. Again, you're looking at a 350, 450, 550, 650 house. Multiply that by 0.035. So in most cases, like when you were looking at an FHA mortgage, which is 3.5%, you're basically doubling that number. What also is included in those closing costs? We talked about the lender fees, we talked about the attorney fees. When you buy a home, something that's now required, it wasn't always, but they learned a big lesson when the whole economy crashed. Remember back around 2008, I think it was, 2008 going into 2009, was they don't want the responsibility of the home buyer to pay for their property taxes and their homeowner's insurance separately, because a lender wants to feel protected by you having homeowner's insurance. And of course, the city, county, state, all those entities, school board, everything that's wrapped up into your property taxes, they want to ensure those are paid. So when you set up a new account, when you're closing on a home, you're creating what's called an escrow account. Escrow account, write that down. That includes your property taxes, your homeowner's insurance, and sometimes it may even include what's called private mortgage insurance, otherwise known as PMI. So your homeowner's insurance will totally depend on your area. Is it a high crime area? What does your credit score look like? What's the age of the home? Those are all factors. I've seen on say for example, a brand new $450,000 house, I've seen homeowners insurance for a new home be as low as $800 or $900. I've also seen it be as high as $2,700. And what could be that difference? Horrible credit scores, not shopping around for your homeowners insurance. You do have a right to do that. All these factors, the size of the home, does the house have other factors like a finished basement, more square footage? Does it have, a septic tank as opposed to public water or sewer? Does it have tennis courts and irrigation and basketball courts and a pool? Like all these things, right, are factors in the value of your home. So that's how they're going to calculate it. Sometimes people will add to their homeowner's insurance, like if you have, jewelry, your wedding rings, an heirloom passed down from a family member, a Rolex watch, all these valuable things. Sometimes people will add that to their homeowner's insurance. Then you have your property taxes. Property taxes, again, are going to be, to get into all these technicalities about millage rates and, percentages and all that kind of stuff. In, again, general rule of thumb, you're looking at probably 1% to 1.5% 1.5% is going to be probably in a very high ranking school district, maybe something like a city of Atlanta tax, Fulton County tax, a Buckhead tax, or a Midtown tax. If it's in a great school district, those type of things will all affect your property taxes and of course the value of your house. So that's property taxes, about 1% to 1.5%. But this is all about the closing costs and setting up that escrow account. So that 3 to 3.5% includes the lender's fees, the attorney fees, and setting up that escrow account. It will be probably at that 3.5%. Again, if you are paying a higher homeowner's insurance and in a highly taxed district, or you're at a higher price point of your property value. So now that you know what closing costs are, and to kind of close the loop of the things that you needed on this section of it, income, credit, down payment, closing costs, you're going to go to the closing table and you're going to need to bring to the table your down payment and closing costs combined minus any seller concessions or credits. What does that mean? Say you're closing in July. So you have January, February, March, April, May, June. Well, you might see a credit back on that Alta form because the seller would have lived in the property for those 6 months. So they are going to credit you, pay half of the year of your property taxes. So that might be a credit. If you're doing a new home build and you use their preferred lender, you might get $2,500, $3,500, $4,000, $5,000. When the market hasn't been that great, I've seen as high as a $10,000 seller contribution towards your closing cost. In a resale market, again, in a market that is not as on fire as it is now, if it's just stabilizing and there's more negotiating room, you might be able to get, with our negotiating skills in the proper market, we might be able to ask for $2,000, $4,000, $5,000 towards your closing costs. It should never, ever be counted on again. But that's where a line item would be. Again, say you bought a brand new home, used a preferred lender, and they're going to give you $5,000. That means in the credit column, you have a debit and credit. In the credit column, it's going to be $5,000. It's going to be $5,000 that the seller is contributing towards it. And some lenders will give you what's called a lender's credit. I've seen on average maybe $2,500 all the way up to maybe 1% of the loan amount. So these are the conversations to have when you're kind of going through that pre-approval process. You thought it was just like, hey, get pre-approved, know that number, I'm qualified, woo, for $350,000. No, you need to have the conversation about your down payment program, FHA, conventional, VA, down payment assistance, or VA, jumbo, any of those, and then your closing costs. What kind of lender credit can you give me, Mr. Lender? If I'm looking at a new home community, is it worth going through one of their preferred lenders to get an additional $300, $400, $500, $7,500 towards your closing costs? These are all factors to consider when you are searching for, before you start searching for a home. That's why the fun part is when we come in. We know your numbers, you know your numbers, and now we're just finding that perfect house for you, or a close to perfect house, because there's no such thing as a perfect house, no matter if it's brand new, custom, it's made by humans. Life situations happen, but it's going to be an investment and a good purchase for you and a place to lay down roots. So that's closing costs. There's a few more things I want to talk about for the home buying process, so stay tuned. But guys, that is closing costs. Watch back the video, take notes, and hopefully that helps. I'll talk to you soon.